welcome back to the Junius Maltby channel for another morning discussion regarding the headlines, what's going on in the markets, and just an overall boring assessment of what's going on around us. So thanks for being here for this installment, this episode, this daily dispatch, this program, whatever you would like to label it as. Kind of felt a disturbance in the force this morning when I woke up, similar to OB1, feeling as if a million voices suddenly cried out and then were just silenced. And I think it was you guys and everyone out there in the bullion community looking at metal prices and wondering what's going on. And so let's try to calm each other down and just take a look at this. And as we do on the channel, and kind of look at some facts, realize where we're at, and always, again, reminding you to not look at the daily prices, but look at the big picture, the overall picture. Yeah, of course, gold and silver hitting some new lows. You're seeing some headlines, and of course, the mainstream mass reject media is, reporting it and blasting it all over. And of course, when it's with metals, it's the end of the world for them, and they laugh all the way to the bank with it, and you're a fool for buying it. But when it's stocks, they immediately label it as a buying opportunity, and it's just a normal correction, and it's healthy, and it gets different treatment, different labeling. Well, I like to label metals in the bullion markets when they take dips the way the mainstream reject media likes to label stocks and bonds and mutual funds and such. I look at it as further buying opportunity, a new low that's almost assuring me that we're getting closer to the bottom of what has been taking place. Then again, metals are more manipulated than the paper markets for like stocks and bonds and such, in my opinion anyways. And so it's hard to predict some of these things. Now, we talked about recently the interest rates, the Fed not raising them, not raising them. We have a whole program dedicated to that, like 3 or 4 videos ago. You can go watch that if you want more details on that. But let's just face the facts. They're not going to raise interest rates. They're not going to. They're going to talk about it again. They're going to kick the can down the road. They just can't do it. Obama just signed the new debt bill. America is in so much debt that interest rates being raised would be catastrophic to the debtor nation, America. So let's just take a quick run. We're gonna sprint, so you're gonna want to try to keep up. We're not gonna read everything. We're gonna skip some stuff. We're not gonna digest all of these articles. So if you want them in more detail, you'll see the names of the articles on here, and you can go look them up and read them yourself, because we're all attached to the World Wide Web that Al Gore invented, and we're all on it right now. So you can go look at it after you log off this video. All right. London Bullion Market Association, LBMA, gold ounces transferred daily in September hits a 10-year low. Now, before I even get to the article, I'm going to give you a theory on this. I think, okay, I put myself in their shoes. If I'm holding a lot of gold and the price is doing what it's doing right now, what am I not going to do? I'm not going to sell it. So I think when you read this and you hear some of these statements that are in this article, consider that. Instead of thinking there's no buyers for the gold or people are slow to buy it, think in a different way, look at it through a different prism, a different angle. Think that maybe there's no sellers. Maybe people aren't selling the gold because they know right now is not the time to be selling gold. It's a time to regroup, and more than likely, like we saw the other day with the asset manager, portfolio manager recovered, maybe right now is a time to be acquiring metals by taking advantage of these prices. So keep that in mind. Instead of no buyers, there's probably no sellers. November 2nd, 2015, the amount of gold that exchanged hands between LBMA members dropped to decade lows in September this year. LBMA gold ounces transferred daily in September hits 10-year low. Kitco News, the amount of gold transferred between accounts at the London Bullion Market Association members from August to September fell to the lowest level in a decade, while the amount of silver that exchanged hands climbed to the highest level since November 2014, the organization reported Friday. The Well, 15.6 million ounces of gold transferred daily last month was also down year on year from 16.2 million in September 2014. The 163.4 million ounces of silver transferred in September was up from 142.2 million in the same month of 2014. So, silver had a little bit more action going on, apparently, in the LBMA, but gold sells slowed and dropped off. And I do believe that is because these guys aren't dumb. They hold a lot of gold. They hold more gold than everybody who watches this channel combined, times 10 or probably 100 or even 1,000-fold. And when you're talking about moving huge London good delivery bars at way over 420 plus ounces, that's a huge investment that's worth a lot of money. When you have stacks of those and pallets of gold, why would you sell them at prices around $1,000 or $1,100 an ounce if you did believe eventually with interest rate fluctuations and market instability and the things going on in the world, that gold was most likely going to react to all of the quantitative easing that's taking place globally, that would react to the mass production of currency and the perpetual decades of low interest rates, and knowing that gold is most likely going to react by increasing in value or increasing in the amount of dollars or euros or pounds or yen or yuan that are required to purchase said bar of gold. So if the value of gold rises in those currencies because of what's happening with those currencies and economies, right now would not be a time to sell your gold or transfer it. Okay. Another headline, gold news. Bullion price is set to drop markedly as silver ETF shrinks near 3-year low. London gold demand sinks. These are those headlines. They're blasting them out there. This is also 11/2/2015, 157. Bullion prices fell to new 4-week lows in London on Monday, with gold edging $5 per ounce lower to touch 11.36 in quiet trade, and silver sliding 6% from last week's spike as European stock markets shrugged off weak manufacturing data, which earlier saw Asian shares drop almost 2% for the day. Weak manufacturing data. We'll get to that at the end of this video. It's happening everywhere. Even in my local newspaper this morning, I opened up a page that was referring to weak manufacturing data and reductions in jobs and slowdowns. And you're seeing these words a lot. Reductions, slowdowns, weak, sluggish. So the economy is basically like a giant freight train, and I think it's hit a large hill and they're out of coal. That coal being whatever you want to label it. Stimulus, quantitative easing, interest rates. Anyways, they've slowed down on chugging the coal into the engine, and now it's barely at a crawl, just barely chugging along. I think eventually it's going to run out of steam, and it might start to backtrack, roll down the tracks a little bit. We'll see. But continuing on, gold slides to the lowest settlement in a month. Well, how does Junius Maltby react when gold hits the lowest settlement in a month? Go buy a stack of British sovereigns. Right now might be a good time to call APMEX, American Precious Metal Exchange, or whoever your choice is. You've seen the videos on who we recommend buying gold from. And inquire about getting a good price on some metals. These are definitely the times. I mean, when gold was sitting there about $1,800 an ounce, I can't remember how many people told me how much they missed the boat and how upset they were that they were not buying gold back when it was $1,000 and $1,100 an ounce. So, well, you put yourself in a time machine. We're back there right now, and this is the opportunity. So, again, take advantage of these prices, in my opinion. Germany's Degussa. He's a bull in a bearish gold market. Not going to put the whole article up here. Just a bunch of stuff you can read on your own if you want. But I do like this line here. If you ask me where from here in the next year, that whole thing rhymes. If you ask me where from here in the next year, I think $1,500 is more likely than $1,000 in the next 12 months, he said. And I do think that's an accurate assessment of the situation. Okay. Another silver headline. Silver set for the longest losing run in 2 months as ETP assets drop. Well, what do we do when silver drops? Try to buy it. Again, remember the times when silver was $40-something an ounce? That was those were some tough times to be buying silver. It was not easy to look at a silver dime and say you want to spend $5-6 on it. So, well, now here you are. You can get some silver at some more affordable prices. Holdings in exchange-traded products dropped to the lowest since 2013. Silver prices retreat a fourth day to the near lowest in a month. Silver fell for a fourth day in the longest run in 2 months, and investors sold the most since June from funds backed by the metal on speculation the Federal Reserve may raise interest rates this year. Gold held at a 4-week low. Interruption. How many of you guys are tired of seeing the excuse and statements that on speculation or anticipation, all those words they use, Federal Reserve may raise interest rates this year? Isn't it incredible how much power the Fed has that the mere rumors or speculations or anticipations of actions that they don't divulge or clarify can have effects on the entire global market, every commodity, and so many different asset groups and funds. It's pretty amazing that every corner, every square inch of the market is affected by the mere rumors and speculations on the potential actions of a group of people that are not elected, that sit in private boardrooms with closed-door meetings and refuse to state clearly what their intentions are and what their actions will be. So everyone has to just assume things, and there's basically chaos in the market that is created not only by the policies and the management of the Fed, but even just the anticipation of actions they haven't even done yet. It's frustrating if you think about it. Holdings in silver exchange-traded products dropped 93.1 metric tons to 18,887 tons as of Monday, the lowest since July 2013. Data compiled by Bloomberg shows. Prices have dropped 6.2% since touching a 4-month high last week after Fed officials signaled that they are still considering tighter monetary policy this year. Oh, we're still considering it. They considered it a week ago and they didn't do it. They've been considering it for 3 years, and they haven't done it. Doesn't anyone else not see that? They can't, they won't. Mathematically, it's not going to happen. If they do, we're going to see some things. We're going to see some big things. A little bit of a shakeup, maybe an earthquake. So, you guys just keep looking at that. And it's too bad all the little worried bird people that hang out in I call them the bird people because, the people in Wall Street and the stock exchange, those got the little blue coats and the numbers and their name badges that run around frantically sweating with greased hair and worried looks on their faces. They're like birds in the street feeding on a pile of seeds. If you walk by them, they all freak out and fly away, and they're real skittish. They're always looking around like for something to attack them. They're very nervous, very scared and fragile little people, and I feel sorry for them because anything happens. A plane crashes 4,000 on the other side of the planet, and these guys look at the headlines on CNN and they freak out and panic and they sell something. They'll sell toilet paper stock because a truck crashed on an interstate somewhere in Florida. Don't ask me how the butterfly effect works, why they react the way they do to what they see and hear, but they're just crazy, skittish, fragile, little bird people, and they think we're the people that are scared. They think people that buy gold and stack metals. Fear mongering, or they think they're always worried about the economy collapsing. I'm not the one that just moved like $1 billion in assets because some freak accident occurred somewhere on the planet or some dictator farted. You don't see me reacting the way no-name individual or someone who has really no effect on anything says something on the news, and then all of you guys in the NASDAQ flip out and sell whatever you got. So, and I'm the one that's afraid of things. I don't think so. I'm not afraid of much. All right, where did we leave off here, guys? Policy this year. Yeah, let's move on to this one. Blatant gold, silver manipulation reflects the complete corruption of the U.S. system. Blatant gold. Okay, found this article. I'm not going to read the whole thing. It is out there. You can type the headline in right there and you'll find it. It's just regarding that there is, again, manipulation and corruption in the U.S. system. And it is an opinion piece, so I'm not going to count any of it really as fact right now, but it's a good little opinion piece if you want to take a view at it. Moving on, How to Hide Hyperinflation, Part 1 by Jeff Nielsen. Kind of a mix of facts and opinions here. Pretty good stuff. I'll brush over some of the article. I'm not going to read the whole thing. In previous commentaries, readers have read firm conclusions that the U.S. government, via the Federal Reserve, has already hyperinflated its currency. Past tense. Yet what do we actually see as we look around us? We see this, obviously blatantly worthless currency with its exchange rate versus other currencies propped up at a particularly absurd extreme. Where is the hyperinflation? Regular readers can automatically answer that question. We see the hyperinflation in the chart below. The exponential increase in the U.S. monetary base, i.e. its supply of money, both the shape and the curve and the quantum of the total increase shriek hyperinflation. As you can see here, here's the chart it's talking about. Big hockey stick curve there. I mean, just look at that. Look at the money supply. Now, this is a very lengthy article with a lot of technical and in-depth writing about what he's talking about inflation, and the way, I'm going to use the word money laundering, the way the money is laundered by the government to hide what's really happening. And you wouldn't put it past them. It's definitely there. But let's keep reading here. Inflation is an increase in the supply of money. This is the universally accepted economic definition for this term. What most people think of as inflation, the serial increase in the price of goods, is merely the inevitable consequence of inflation, inflating the money supply. If inflation is an increase in the supply of money, and the U.S. supply of money has increased literally at a hyperbolic rate, then by economic and mathematical definition, the chart above represents hyperinflation. Case closed. That's it. We have it. But the reaction to it is being hidden or squelched somehow. Or is it? Where is the massive price inflation, which readers have just been told is an inevitable consequence of this hyperinflation? Part of the answer is that the hyperinflation has been hidden, and thus the price hyperinflation has been delayed. The other part of the answer is that historically, actual hyperinflation, meaning a currency officially plunging to zero, is a confidence event. Unquote. What I think it means by that is confidence event. It's just the money's only worth something because everyone believes that it is. All it's going to take is that a lack of confidence, something happening. Like, for example, what happens to the little bird people, the NASDAQ and the Dow guys, all the little traders in the Wall Street Stock Exchange. When those guys finally lose confidence, and so they start selling, whatever it may be. But when the population, when the people that use these bills, these little green pieces of paper, begins to lose confidence or see that the emperor has no clothes, and see that, well, wow, they're just printing this stuff or just creating it on computers. How does it really have value? Once that starts to take root and hold, which it does, and it has in every population going back to the beginning of time, ever since the Romans began plating bronze coins with silver and then issuing them just out of bronze, the markets shut down and the money became worthless and things changed. Bartering took place. Merchants closed up shop. There was tax problems. People moved. There was population shifts. We saw what happened in Africa, Zimbabwe. We saw what happened in Weimar, Germany. Hyperinflation, inflation reactions to it have been happening across this planet, around the globe, all throughout history. And, the time for this currency to die, because all fiat currencies eventually return to their intrinsic value, and that's zero. Eventually it will happen. And it's just a matter of time. It's a confidence event that has yet to happen, but eventually it will. It always has. There hasn't been a time where it hasn't. So we'll see. I don't see what would make our currency any different or immune. Okay, so I told you to get to this article at the end. I told you we're speeding through this. You guys got to keep up. We're running through these headlines. We're trying to get through as much material as we can today because I'm busy. I got stuff I got to do, and I really wanted to get this out to you guys just to help keep the channel alive and keep the conversation going. U.S. manufacturing grows at the slowest pace in 2 years. U.S. manufacturing grew at its slowest pace in 2 years in October, according to the ISM. The number of manufacturing jobs declined by 8% last month. So there's headlines all over about this. And I also read about employment numbers related to this, manufacturing jobs being reduced and dropping, U.S. manufacturing growing at a slow pace. And you also saw that it's happening in other countries as well. So, is the economy preparing for something happening? Are there people that are seeing things and not telling everyone else? But who knows? I mean, there's definitely some slowdown. Could be we're going into winter. In other news, closing, let's just real quick, we don't touch on foreign policy and war stuff too often on the channel, but you all saw that a Russian passenger jet was shot down. Unfortunately, very sad situation. 240 plus civilians, a lot of them kids, dead. The plane disintegrated, it sounds like, over the Sinai Peninsula, just blew up, disintegrated, and there's now speculation coming out about what exactly happened. Apparently a satellite saw a heat signature just prior to the explosion. That came out in the news today. There's potential or possibilities that certain fringe groups of ISIS have stated or claimed to have shot it down. There's accusations being made. Now it's a tangled web, right? I mean, who knows? Someone might have shot it down to blame somebody else. Someone might have shot it down to get back. I mean, but all I know is it doesn't bode well. It doesn't look good, and it's unfortunate. Innocent lives were lost because state players want to play big games and do things, and well, it's going to be interesting to see the consequences. I don't think if it does come out that there was terrorist involvement. We all know the Great Bear of Russia is very good at defending its people and will most likely roll into that little sand-covered region with all of the wrath that they're capable of to revenge the lives of their citizens. So this could lead and escalate and cause a domino effect, I think, in military action. We'll see. Where'd they get the missile? This jet was flying at very high altitudes. And I don't know if the region of Egypt and Syria and so on has the technologically advanced capabilities to produce a surface-to-air missile that can down a jet flying at cruising altitude. So it's likely this missile was acquired from another region, from another a more advanced nation. And there's going to be questions as to how they acquired this missile, who fired it, where did it come from, how'd they get it, where'd they get it, why'd they get it. We'll see. A lot of questions there, and that's just this could be the very incipient stage of a much bigger event. So, all right, keep stacking, keep strong, guys. Don't worry about these daily prices in metals. Thanks for being here for another rapid machine gun episode of the Junior Small PE project here. We covered a lot. We tried to get through as much as we could. And I appreciate you guys being here. Now off you go. Go read some of these headlines and articles on your own if you want to, and to pop your comments below. Don't forget to like, subscribe. Don't forget to share. The only way this channel grows is when you guys make it grow. Share it, recommend it to your friends, bring them here. I've got like 1 or 2 friends of mine in the whole planet that I can actually talk to this stuff about. So I'm sure not many of you are probably in the same boat. You might have 1 or 2 people you can talk to. Everyone else wants to talk to you about the 49er game or the Kardashians. So you got to just tune those people out. I shut that off, walk away. I can't engage in those conversations. It just doesn't work for me. I don't know, I might be weird or something, but it just doesn't interest me. There you go. Have a great day. Take care.